Let me show you my recent trades and help you understand how I traded. So hello, welcome to a new video, and I prepared a very interesting, hopefully, video where I go over a few recent trades as examples and trade studies that I want to share with you, and just share a little bit of my thought process. And this is the strategy is based on the strategy that we teach in our masterclass, which currently is free with our cashback deal. So make sure to check the link in the description below if you want to hang out with me and Moritz 7 days a week. We have up to 7 live videos per week, and we show exactly how we trade. So Ozzy New Zealand, I was in this trade for almost 2 weeks. Usually I'm not that long in those trades, but this one was, it just took much longer than I first initially anticipated. But it was a classic breakout trade. There's nothing fancy about this trade. Let me put it together for you. So the market hit here a triple bottom. Here's a very big demand area. You always caused in the past, every time, a major bullish run. So huge demand here. It will be interesting to see what happens, by the way, when the market gets here and if it gets here. So this will be interesting to see. But what is more interesting, the context around the trade. So the market was in an uptrend. Then the uptrend had its highest high here. And then afterwards, the uptrend lost strength. You can see that here. It made lower highs. It started to make higher highs for a little while, but only until it hit here the double top. This is I talked about this in a previous video. It's called a spring pattern when you talk about Wyckoff analysis. So this is a very popular pattern actually, and within this consolidation, we can clearly see that this uptrend is over now. We don't really fully know yet if this market is really going to roll over. So you can see we had within this consolidation a very nice, well-developed, well-defined support area, and all I did really was wait for the market to break out. Most amateur traders, they cannot sit on their hands, obviously. They always want to be in a trade. And this is something that you will learn or have to learn to control if you want to become a professional, profitable trader. And you can see here was a big bearish candle. It didn't break the support level yet, so this is not an entry signal, but you really want to wait until the market gets out of this zone. And then here, the market then on the next day finally broke out. We had 2 retest days, which is common. It's a small consolidation before then the market took off. And afterwards, you can see there was not a single bullish day. The market slowly but steadily moved lower. There was no reason to get out of the trade. Many people, they will start worrying, whoa, there's a small candle, the market has a big wick. But at no point in time did the market show a bullish candle. When we look here, for example, at the previous trend, the trend was quite strong and the trend lasted for a long time. But even here there were small bearish candles. Not many, just occasional. One, here 2 small candles, but usually just one. Here we didn't even have that, so you really need to put things into context. Just because there's a small candle, it doesn't automatically mean you should exit the trade or that the trend is going to be over. It's the market behavior. Just look at any trend. Here you can see the market was in a strong uptrend, but even here you had occasionally bearish candles. The market was in a downtrend, and here very often you did have bullish candles. The market was in a strong downtrend here, but occasionally you had bullish candles. So really, you need to sit through this. You need to work on your patience when you're in a trend and when you're in a trade. So here at no point was the market showing you signs that it was ready to reverse. So I stopped worrying about this, and then eventually the market hit the target, overshot it a little bit, and now the market is pulling back. So this is just one trade. Then we have the New Zealand Swissy, which also, I'm still in this one. And again, we have a nice context. The market was in a very long downtrend since here. Then here was the final leg of the downtrend. And then here the market put in a bottom. First, a double bottom, which shows, okay, the uptrend is over. And then at the same time, it developed a top here, resistance level. And now, once you have this resistance and a support level, the market always keeps bouncing between those levels. And this is where most of the retail traders lose all their money, because they just can't sit on their hands. They always need to get involved in a trade, and they always have to be in a trade. And this is where it really separates the pro from the amateur. The pro knows that sitting is part of the game, and then you can only trade when you really have an edge. And as long as the market is within such a range, it is impossible to say what is going to happen. You need to wait for a breakout, and before the breakout, there were a few signs. You can see the market started making higher highs, higher lows, and at the same time, the market kept pushing and pushing and pushing and pushing into the same resistance level. And each time the market moved into the level, it came back quicker and sooner, and eventually broke out. So this is a very, very important pattern, something that I teach in the masterclass as well. It's something that you will see around breakouts very, very often. And yeah, now the market, yeah, it's not a smooth ride. You can see there's a gap, and here's a gap. There's some wicks, but for now it still looks good. Obviously, there's always the chance that the market will just pull around and move back into the entry or even in a loss. That's part of the game, but so far it looks good. What you could do is also move your stop loss to a closer place if that's something that you are into. It really depends a little bit on how you want to approach this. And yeah, for now it looks good, but yeah, it doesn't look as strong anymore. But who knows? This is not a fully closed candle. It's still 9 hours to go for this candle to close. So a lot can happen. There is NFP week this week. So yeah, for now it looks good, and I don't think there's any reason to close the trade. Of course, you could always manage it somehow. Then one of the nicer trades I had in the recent weeks was natural gas. Just a beautiful, beautiful trade. It was a long trade. And by the way, what I do on Tradeciety and in the masterclass, it works for all time frames. I personally prefer to trade the daily and the 4 hour. This is the 8 hour, but it's the same. And Moritz goes all the way down to the 200 to the 5 minute time frame, and it's more of an intraday trade timer. And here we have the same principles, and this is what I explained in the last Wyckoff video. You need to really understand how to read trend and trend strength. Downtrend, and then at one point the downtrend came to an end. It made a double bottom, then higher low, higher low, higher low. We have very well defined resistance level, and once you can find such a market that trades between a support and resistance level, all you need to do is wait for the confirmed breakout, and that's it. There's nothing else to do for you. Stay away from range trading. I found that this is not a profitable endeavor, and I've seen many traders lose a lot of money when they trade ranges or when they get involved in ranges, because it's very predictable. You don't know where the level is, where the price is going to bounce. The reward to risk ratio is usually not great, and you just get whipped around a lot. So the best, and how I approached this, was a long breakout. And once the market closes, and that's important, you always need to have a full close outside of the range. That's where things get interesting. So a full close, and then you can see the market quickly accelerated into the target. I usually use a 3-to-1 reward to risk ratio. I found that this works quite well. Obviously, in this case, you would have made more money if you kept your trade open, but it's only hindsight 2020. It's all about long-term, and long-term 3-to-1 works quite well for this type of trading. And this is yeah, you can see the trades look all quite similar. It's trend trading, it's breakout trading, but yeah, every new trend starts with a breakout. So the lines between the different trading styles, trend trading, breakout trading, and reversal trading, are very similar, or are very yeah, it's not very clear, because, well, breakout trading is actually a trend trading, because every trend starts with a breakout, and reversal trading is usually also a breakout, because here is where the previous downtrend reverses to a new trend. And reversal trading and breakout trading, it's all hand in hand. So Again, you should not really try to pin down what you're doing. Don't be so stubborn to say, I'm a trend trader, I'm a breakout trader. It doesn't really matter. Learn to read how the market moves, what does it tell you about buyers and sellers, and then you can apply this to all the markets and all the time frames. And again, we have a great team in our masterclass. Make sure to check the link in the description below. You can get in for free with our special deal right now. And make sure to check it out and read all the information about it. And then you will see how I trade this week after week, day after day. And we share most of our trades in our masterclass as well.